Hello, everybody, and welcome to episode number 144 for the National Land Podcast. My name is Matt Christian, and I'm the Chief Marketing Officer here at National Land Realty and your host. Now, today we're talking about agricultural lending. Now, whether you're talking about interest rates or FSA loan requirements, the environment is changing on a consistent basis, and that's what makes companies like ag lending groups so important for farms and ranches throughout the United States. Now, this is a Phoenix-based agricultural lending firm with deep roots in farming and finance. Today, we're talking with their owners, Richard Cook and Madison Durkin, about what it takes to run an ag lending firm and what they do that makes them different. This is a cool topic with lots of information. Now, sit back and enjoy. All right, the chime has sounded, which means we are live and recording. Welcome to the National Land Podcast. I am here with the Ag Lending Group out of Phoenix, Arizona, with Richard Cook and Madison Durkin. And I want you all to tell your story about the Ag Lending Group. And I love the moniker that you guys have. No suits, no ties, no lies. Is that that is the moniker that you guys have for a tagline? I love it. And just tell me about the company a little bit and sort of how did we get to where we are now?
Yeah, we were chatting about that on the way over here and kind of chuckling along the way. It may have been by accident that this company got started. My father, Richard, founded the company 10 years ago, and I'll let him talk a little bit more about his background, and I joined him 9 years ago. But essentially, farmers in the Central Valley, which is where I was raised, and he had a pretty substantial farming operation that he was involved with. People kept calling him for advice, and then that morphed into an advisory role, and then Ag Lending Group was born. So I'll let him go into a little bit more detail on that.
Right. So I've been involved in farming for 60 plus years. I saw my first farm when I was a CPA at Price Waterhouse, and I was sent to audit large sugar companies in South Louisiana. And I really enjoyed the people and what they did. And following that, I was hired by a farming family in Central California and moved out there, and ultimately became CFO and then a partner with one of the family members. And over a period of time, I encountered every thing you can in farming, from having a thriving, successful business with a lot of cash flow to having an insolvent farming company after Jimmy Carter raised interest rates to 20 plus, and I had about $100 million in debt tied to prime rates. So that didn't work very well in farming. And I sat down with the chairman of the bank that had the debt and worked my way through it over about a 5-year period, and then went back to building another farming business after that. So I learned how to deal with success, how to deal with failure, and still not be bankrupt. So that was a learning experience, of course, and I did lots of other things along the way after that. At one point, the company that I was a partner in was the largest wine grape grower in California, and we sold all of our grapes to Giulio Gallo of the Gallo Winery. So you roll that forward to now, and I had retired from those businesses and done a lot of other types of businesses successfully. But as she said a minute ago, people that I knew over the 60 years kept calling me and asking me what I knew about something, or could I help them with something. And I discovered that I had a base of knowledge that went beyond being a CPA. I really had learned how to be a farming businessman, but by riding around in pickup trucks with my partners and listening to them tell others what to do and tell bankers how we did what we do. And it got to a point where I could give a tour to the bankers and they thought I was a farmer. And I would then admit to them that you don't want me planting your corn or anything else because I don't know how, but I know how to raise the money. So as we formed Ag Lending Group 10 years ago, it was after getting repeated phone calls from people saying, "What do you know about this? And can you tell me what I should do about that?" And it rolled into being a business. And Madison joined me a year later, and we decided to grow it and develop sources of capital to make loans with. So we continue now to make loans and to give advice to people that want to pay for advice. So we do everything from talking about how to build a farm to how to rescue your farm from the clutches of the special assets guys at the bank when they want to close you down. So we've got those two lines of business. The largest segment is making farm loans. And Madison now does most of that work, and I do. I've turned into the person that answers the phone.
He's a lot more pleasant to get on the phone than I am. But
So,
no, truly, like somebody will call and he is very good at listening to their story and maybe seeing it in a way that they thought they needed one thing, but he'll listen to what's going on and get the full scope and have maybe a different perspective just, from his background. So you do want to get him on the phone initially.
yeah, I'm the only one that answers the phone, so it's easy. But, so the phone rings, I answer it, and my opening line is, "Tell me how we can help you." And they'll start talking and tell me their problems. And I'm actually yet to meet a customer who, if I get them to open up and tell me what their problems are, I can generally tell them that I know the solution and we'd be happy to work with them if they like. And then it rolls into a write-up that I'll give to Madison to work with them to execute the plan. And I think it works out most of the time, doesn't it?
Yeah, I think so. And we're having a good time.
So you were talking about coming up in finance and you were at Bryce Waterhouse and then moved into farming. Did you grow up around agriculture? Was that a thing for you?
No, but I took a bookkeeping class in high school and I loved it. And to this day, I'm the best bookkeeper I've ever met.
He's from Southeast Louisiana.
Northeast.
Oh, sorry, Northeast Louisiana originally.
I grew up in a town of 10,000 people. It's the same town where the Duck Dynasty guys are from, and it's a poor town. I grew up poor, but my mom and dad didn't tell me I was poor.
I can identify with that. I had a single wide on wheels in the middle of the woods, and I thought it was the coolest thing ever.
Yeah, right.
Yeah, I had to ask you that because it just you coming from the finance background that you had, and Waterhouse is very well known in that realm, and just the way that you've identified with ag and more or less with the boots on the ground, like dirty shoes crowd of going out and getting stuff done. It's not typical. That's like you really have dialed into that. Do you view yourself, do you think you kind of shaped how you formed this thing as being the support that you always wanted? I'm picking up a vibe here on that, where it's like you've really kind of dialed into supporting I want to say family-owned farms.
I think that's true. I mean, we've never had anybody call us that we told them we wouldn't help them.
Or try to.
Yeah, I mean, maybe it doesn't work out, but we'll try to help anybody that calls us.
I think there is a little bit of an emotional component for me. I mean, I grew up on a farm in Central California. That's where my parents chose, to raise us in the middle of an orange grove orchard. And it was a great childhood. But I mean, I remember those ups and downs when things weren't great and stuff was going on, and during some impressionable years. So when we do get a call or we have a file that is a little bit more tricky and doesn't fit in the box, there is a part of me that really does want that to succeed. because I experienced certain things. I remember certain things happening.
Yeah. So
I won't say.
Sounds like she had a traumatic experience.
I grew up, my family was we owned a feed mill that my grandpa built with my great grandpa. They poured the concrete into the molds and everything. And when I was a kid that didn't like to listen to what I was told to do, I got sent off to work with grandpa starting at like 8 years old, shoveling grain into an auger. I remember the first time, like got handed a shovel and a broom and got to work on that. It was always like the fun part of my summers. But I laugh about it later because I always make the joke that in agriculture, you don't have kids, you just increase your workforce. And so I remember going through all those summers. I don't think I got paid for a single day I ever worked there. It was always, it was just what you did to keep in line. I wanted to ask you, so you were talking about getting funding for what you do for Ag Lending Group. And I'm guessing, and I don't know your business model, but I'm guessing that's a lot of private funds, like you're working with probably private back equity, like that kind of thing. Tell me a little bit about what that market is like. I think most people that own ag are familiar with FSA. Some people may not have experience with private lenders. So I was wondering if you could sort of walk anybody listening through sort of what the marketplace looks like to getting funding for ag land.
Yeah, so you used the term private equity, and private equity is not a source that we use.
Okay, perfect.
But we get money from the public markets. We get our money from the same place Farm Credit does.
Got you. Okay, so secondary marketplace goes, and then okay.
Yeah.
Right. I mean, I think FSA, USDA loans are fantastic programs for beginning farmers and people like that are just starting out. And I would urge them to use those programs. We don't, but insurance companies, what Richard just spoke to, and other sources that we have. I think our philosophy is that you manage the farm, we'll manage the financing. So we'll work directly with your bookkeeper or whoever's managing the accounting, your CPA, and put together the best package that meets your needs with all of our different sources.
So you're able to take if you're going through the same things as FSA, is this through like Farmer Mac sort of channel, or is that, I'm just curious.
Yeah, that would be one of them.
Okay.
But not exclusive to that.
Yeah.
So we have solutions that, there is a certain box that you need to fit in as far as qualifications for Farmer Mac. And if you can, that's fantastic. But we have sources that are outside of that box for those that don't qualify. And then we stick with you. So if you don't qualify for something like that right now, we don't exit that relationship. We stay with you over the years, and we'll work with you hand in hand to try to remedy whatever disqualifier you had and get you qualified for a 30-year mortgage when you do.
Farmer Mac was our first source. And I went there because when I was, I don't know, I must have been 35 or 40, I did a lot of business with Prudential Life Insurance Company and Prudential and Zions Bank in Utah. And so that was our base. And now we have probably 10 different sources, including the largest insurance company in America that we're a relationship partner with.
So tell me, so discussing that, and I don't want you to give away any of the secret sauce behind what you do or anything like that. But as far as where you fit in the marketplace, as a landowner, and you're exploring, loan opportunities, like you said, FSA is a great place to go look. And tell me, like, at what point should they be looking for somebody like you out of the gate? And I'm sure that's what you would like as far as logistically. What does it look like if I'm a landowner, I'm looking around and I'm trying to find somebody and getting to you? What's sort of the route for that?
I would say the biggest, sticking point in why you would gear towards an FSA would be their higher loan to values.
Okay.
So our highest loan to value typically is 70%. So anywhere between 65 and 70%. If you're making a purchase and you have a pre-existing relationship, you've been renting the property for a while, or it's a relative, we can use the appraisal value. So it depends if it's an arm's length or not arm's length transaction. There's different things that can happen there, but typically 65 to 70% is our loan to value target.
And as far as the kind of land that you work with, I mean, we're saying ag, but do you specify on? I find that when we talk about ag or talk about investment land or things like that, some people approach it from an angle of it has an investment opportunity. Some people it has to be growing food. It just depends. I wanted to know if you stipulate with the types of land that you work with, or if there are even stipulations, or if I'm completely blowing hot air and completely missing the base here.
No, I don't think you are. I would say like minimum acreage is 20 acres. Obviously, there's a big difference between 20 acres in rural Arkansas versus 20 acres in California. But we have everything from hobby farms where the cash flow is actually coming from an off-farm job, but it's zoned ag, rural residential, to very large dairies in California, the Midwest, to a recently closed family in New Jersey that has a large piece of property, but they also have really nice greenhouses where they're growing Chinese herbs that are going into tinctures. So, I mean, it's like the full gamut. Ashwagandha and all those types of things. And he said that the homeopathic doctors in New York and New Jersey, the demand for his product, it's so high quality, he can't keep up. So he was looking to expand. So everything from that to, large dairies, row crops, almonds, oranges, everything.
I'm really glad I asked that question, because that has been a conversation point with other lenders. Some lenders are looking for individuals who are living on site, own the land, and are running a cash positive operation in crops, and like they really stipulate. And where you're talking about the hobby farm where somebody does, is producing, but maybe it's not their primary cash flow, and maybe that's not where they're funding from. What do those situations look like? Where, like, I mean, those are unique as far as from a funding standpoint. How do you work with those?
I mean, typically they'll come in and, we'll analyze their cash flow. Obviously, there has to be some ag activity going on the property. The highest and best use needs to be ag. But if they can show off-farm cash flow, we can work with them and gather their tax returns, financial statements, credit scores, put together the story, and go from there.
And you had talked earlier, and you and I had talked. Richard was not in that conversation, but I mean, you all do the same thing. But when you were talking before, you were talking about restructuring of farms and working with farm owners on sort of, I'm going to say, helping them manage their house when it comes to their land. That's a really unique thing, and I think that's really cool, and it's probably something that sets you all apart. I was wondering if you could tell me a little bit about that process, maybe an example of somebody that you've worked with. I mean, providing that it's not of a confidential nature and everything. Yeah. But I was wondering if you could kind of walk me through sort of that realm that you work with.
Yeah, I'll let Richard, speak to some of those stories, because I think that really kind of goes back to the beginning of our conversation with his background and what he personally went through, and how he gathered that knowledge base and applies it to Ag Lending Group. That advisory work is something that we don't really advertise, but we take on a handful of cases a year. So I don't know if you want to talk about
Sure.
some of the cases we worked on.
Well, one clear one is we were introduced to a rancher in the West that has cattle operations in the Sierra Nevadas. Now has land in Wyoming, Montana, and Colorado, where he moves his cows during the certain times of the year when it feeds better there. But he came to me, a special assets banker at one of the large banks, asked me if I would talk to this guy and try to help him because they were ready to foreclose. He was really in bad shape. And I started working with him and went through a lot of ups and downs and challenges. And now he is in wonderful financial condition, growing every year. He's not in special assets anymore, and he has a thriving business. And that took probably 5 years over in
almost
total,
5
I would say.
years.
And now in the last year, Madison has been able to get additional debt for him that's at market prices for the money. And he's a successful rancher, still growing.
So these
That's-
cases of restructure, these are kind of like special circumstances. This sounds, I mean, if you're doing a 5-year process with somebody, this is not something that you can just like do a la carte for anyone that comes in. Like this has to be, that's got to be evaluated. There's a significant time investment there.
Well, yeah,
Yes.
there is, but I mean, to get him out of special assets and on his feet, so to speak, maybe 2 years, and the rest of it's just been relationship where we're the people he wants to work with when he needs something.
And is that, I mean, we could probably do an entire podcast on that process. I think, you know, as far as the conversation of what goes into, you know, an ag operation and how to stop the bleeding, I guess, when it comes down to what they owe, how to get them out of looking at foreclosure and everything. That's just something that you've decided to offer along with the lending along the way? Is that just kind of, I mean, like you said, you don't advertise it, not a huge part of your business model. Is that just something that you felt was the right thing to do?
I enjoy doing it because it's interesting. Every case is different. But you know, a lot of times it's a bank will send people to us that the bank's at their wits end, so to speak, and they want them to close their business and go out of business. And so they'll send them to us to see if we can help. In most cases, the help is not in being able to immediately getting new financing for them, because if they were qualified, they wouldn't be exiting the bank. So it's a matter of helping them and holding their hands of how to get through the problem and get back on their feet, and then start slowly and surely being able to get debt. And often it's easier for us to get what I'll call alternative financing for them and then take them back to a bank, because you can't just go right back to a bank if you've been in trouble. A lot of people that are in trouble have been given advice that they should file bankruptcy. And when they bring that up with me, and I just tell them they're talking to the wrong guy, because I don't think that's a solution. If that's an end to your life. If you file bankruptcy, you're not going to easily get any financing anymore, and it's not necessary. I've never encountered a case where a farmer couldn't pay his bills, that he couldn't work his way through it if he knew if he had the skills. Now that's a big thing, if you have the skills, because most people don't have the skills, and that's one of the things I do.
I think there's a lot of emotion behind it too, that he brings. He kind of takes that out of it, or manages it from.
Yeah, I mean,
I
at less than 30 years old, I personally owed a bank over $100 million. I couldn't pay it back. Again, I blame Jimmy Carter, but there were a lot of other factors. And so I was less than 30, and I sat down in a room by myself with the chairman of the board of the bank. And in that one meeting, I worked my way through a solution. that took 5 years to complete, but that's where we made the deal, in that room. And, if you're going to be emotional about it, you're not going to get it done. So I'm not saying I don't have any emotions, because I do, but I don't have any emotion about debt.
I was going to say, I don't think that you would be having the discussion that we're having right now if you didn't have some kind of emotion tied into the process.
Right.
And there's sort of a, almost like you got a little bit of a rebellious streak as far as, you know what I mean? Is like you got, because I mean, correct me if I'm wrong, but I mean, if I'm picking up what you're saying, on standard, it's really easy to have a disconnect between a banking institution and an agriculture operator. I mean, a lot of banks don't get it, if I'm hearing you right. And finding somebody like you that gets it, it's a whole different ball game. It's not just give us money and make your profit or you foreclose. There's a whole middle ground to operate in. Is that
Sure. I mean, in my case that I was describing, I was insolvent. You're not going to make that better by filing bankruptcy, even though a lot of people do. And I'd say the banker, who was the chairman of the bank, understood how I got there and why I was there, and the fact that I had a vision of working through it. So he wasn't going to lose any more money if he threw me out the door, and if I was willing to operate the property. So it's kind of common sense, really. But today there's so many regulations that the federal government and Federal Reserve has over banks. A lot of times they don't have any choice but to tell you to leave the bank and sign over all your assets and so forth, because if they get criticized by the Federal Reserve, it hurts their bank's rating with the government, and it hurts their stock price, and all kinds of bad things happen to them. But the truth is, they're not very good at managing their problems.
I think that's something a lot of people would agree with you on. Madison, we talked briefly too when we were kind of running through this about you work with a lot of inherited land, and I wanted to sort of ask you what that scenario is. I mean, we are stepping into the largest transfer of wealth and land in the history of this country. Trillions, I think it was 81 trillion or something that they're looking at in the next 15 to 20 years. And it always gets discussed in terms of wealth, but part of that wealth is land, and it's starting right now. It has been going for a bit. It's only going to pick up steam, so it matters. And I wanted to just sort of ask you about, one, how you work with it when you work with people, and sort of some of the things that people should be looking out for, or if there is anything to be looking out for. Just sort of, I guess, just kind of pick your brain there.
Yeah, I mean, I think what I mentioned was we are working with quite a few families who the next generation is taking over. And that's exciting to see that some of them are still hanging around and they're not leaving. And we love helping with those transfers when they're available. But I think what I had mentioned was there's a lot of family businesses that have a similar dynamic to what we have. And we really like working with them and are flexible. I was on the phone this morning with a daughter, and she had a kid that opened the door and got in the car. And she said, "Madison, my kid just got in the car. I can't, I'm going to text you." And she did. And we just started going back and forth over text. And it worked. It was efficient. And I got the answers that I needed. And I said, bye. And, went off and did what I needed to do. And it's going to be fine. But I think that there's flexibility that people need that we're, giving them. They look a lot like us, multi-generational, families that we're working with. So sometimes you just have to text.
Sometimes you just have to text. I like that. Is in the terms of like when we're talking about flexibility, what does that look like from business operations standpoint? I mean, obviously communications, that's one, like being open and rolling with the punches when we're talking to a family that, you know, any number of emergencies could start out when you're talking to somebody running a farm. What about us in terms of is it a matter of being flexible in how you operate loans with people? I mean, you've kind of spoken to that in terms of the restructure things, but that's not everybody that walks in the door. And so I mean specifically like financial instruments. I think I'm getting at is sort of how do you approach that, because it's not the same with every case. I guess I don't know.
I had somebody send me their financial statement on the back of a napkin. They wrote it at while they were having like pancakes and coffee in a cafe with a pen on the napkin and texted it to me. And then we made it look presentable and sent it back, and they reviewed it and signed it. So I don't know how much more flexible. I'm getting balance sheets on backs of napkins here. I don't know how much more flexibility there is.
That's exactly what I was looking for. Like, I was curious, like, is that, so you're working with everything from that to hardcore financial statements?
People that have the best CPAs. I mean, we're running the full gamut here. Yeah.
How do you approach that? I mean, like, it seems like you approach it pretty openly. Like, it's not like, oh, you wouldn't believe this, it's crazy. It's like, no, this is just how we go. But is there a philosophy, a process behind that? Or is it just like, we're going to work with whoever walks in our door?
We're going to work with what you have and meet you where you're at. The only thing I wasn't able to work with recently was typically we'll need verification statements for a lot of the assets and liabilities because they're self-prepared financials, napkin or no napkin. So I'll ask them for statements. And I asked this one rancher for his cash verification, thinking he was going to send me his checking statement. And he literally sent me a picture, texted it to me, of a bunch of bills strewn across the passenger seat of his truck. And that was the only time I wrote back. I was like, this is too flexible. We're going to need an actual statement, sir. He goes, so you don't want a picture of the guns and the gold in my safe in the basement? I'm like, no, sure don't.
Because it was collateral?
No, it's not collateral. It's an unverifiable asset. I don't need your,
I got you.
Careful. Yeah. But that's where we can't be flexible. So
I'd say our ultimate flexibility is, and this is a differentiation from other people, we don't charge a penny unless we get the deal done.
Yeah.
We work totally on contingency. So we'll look at what you want done, and if we think we can do it, we'll sign a contract to do it and get paid if we get it done. A lot of people in our business want a deposit or a retainer or something to just start working. We don't do that.
What is your favorite part about what you do?
Is your favorite part working with me?
Yeah, actually, it is a big part of it. And I get to see I get to see my granddaughter almost every day.
That makes it worthy. Madison, what about you?
My favorite part is getting to know these people. I think the case that Richard talked about with the special assets advisory side and then bringing them into a really good long-term mortgage eventually when they qualified. We go to funerals, we go to weddings. It does become more personal. And so those are my favorite cases when you really get to know people. Obviously, there are loans that we close where that is not the case, but those are my favorite.
Yeah. This rancher that I mentioned earlier that came out of special assets, I probably talked to him on the phone 4 days a week.
Still?
Yeah.
Yeah.
After 5 years?
Yeah.
That is a heck of a relationship. I don't want to ask either one of you what the worst part about what you do is, because I asked you your favorite part. Because it's just reading between the lines and stuff. I don't think that you have that sort of mindset, like it's bad or there's a bad part, because it just seems to be, and Richard, you spoke to it, is you really enjoy kind of cracking the code. what is the most challenging part of it? I'm going to say challenging because I don't think that either one of you view anything as like the worst or the bad part of it, like I said. But what is the more challenging part about what you do?
I'm going to say my most challenging part right now is the internet is flooded with opportunity right now. And people think that by putting and signing a dozen applications that they're going to land where they need to be. And I wish that they would just come to us and let us work through the file rather than go out to 12 different places and have their credit dinged repeatedly only to get denied. That's the most frustrating part for me. And then if they do find us, by the time they get to us, they're like, we needed money last week. And appraisals take a really long time, as you know. These are not like quick residential appraisals. So there is some time in there that I can't control.
Richard, what about you?
I understand what she said, and that is the hard part, but I don't get involved in that. So she does that.
What for you? What is the sort of challenges you see or that you face?
Probably, actually, not very many, but probably one would be convincing somebody of what I think they need to do, and they don't agree with me.
We had this is interesting that you say that, because I was talking to this guy in Northern California Monday, and he said something like, he introduced himself and I said, hey, I remember talking to you like 4 years ago. What happened? And he goes, what happened was your dad was right about everything he said to me over the phone. And I laughed and I said, I'm not going to tell him that. So earmuffs. But, he's like, I talked to your dad and he said this, and this, and this was going to happen. And it did. And he goes, I wasn't ready for you guys then. He was right. I don't know if I am ready for you right now, but I want you to take a look. And we are. I'm not sure what will happen, but I think, I'm sure there was some advice given, and it sounds like maybe he didn't take it. And he's looking back thinking, okay.
Yeah, but it's not hard if you do it. If it's what you've done for 60 years, it's not hard.
Yeah, there is no shortage of stubbornness in agriculture.
Yeah.
That is the number one. It's just the thing, and it has to do with the love of your land and the love of what you do, and there's emotions, like you spoke to it, Richard, as far as when emotions are involved, decisions become a little more difficult. And when you approach things objectively from the outside, from a numbers driven in a numbers driven way, you get a different viewpoint and you separate those emotions from the problem, and it lets you solve problems a little differently. And I think that's what it sounds like you all do is just pull back, zoom out, and look at the overhead, which is fascinating. Tell me, so as far as you're in Phoenix, Arizona, what are the territories that you work with geographically?
United States.
There we go.
All across, a lot of people that we knew back in Central California that we still work with and have relationships with, but we're everywhere.
I'd say even though we have a large dollar book of business in California, those land's generally more valuable there. But we have more loans outside of California than in California. But somebody may call from Maine or New Jersey or wherever, and they'll say one of the first questions they'll ask me is, where are you? I'm in Scottsdale, Arizona. Yeah, well, you probably don't know what I'm doing here where I farm. I say, try me out. Tell me what you're doing. And generally, I've either done it or knew somebody that did. But it's all the same, different crops.
Yeah. Well, and it's like you're overcoming a huge thing by having that conversation in the first place, because I like to joke about it, like the "you ain't from here" syndrome, where it's like,
Mhm.
if you're not local, like you don't know me and you don't know what I do, and overcoming that hump, like that's really difficult to do. It like if you've already done that and branched out, that means something.
Right.
So all over the country, you work everywhere. I wanted, and I want to be conscientious of time. I slotted you both for an hour, and we're getting close to that time. So the first thing I want to ask you is if there's anything that I haven't asked you that you think I should have.
No,
No.
but if there's anybody listening in Hawaii that needs a land loan, that's
Ooh,
one state we're not in, and I'd love to come visit.
I don't think there's any way I can dovetail on that, but I've been like, yeah, no, me too. Yeah, send me on. No,
Yeah.
I like your business plan though. I think so. Anybody in Hawaii that's listening to this, there is plenty of ag in Hawaii. Get that
Yeah,
done
I
for you guys.
can't think of anything we didn't cover. You?
No.
No. I guess the one thing we, didn't say is we talked about the relationship that we build on this kind of special assets advisory side, but the truth is we're the main contact for all the loans that we work on through the life of the loan. So if anything comes up, we're around and we maintain those relationships. We don't go anywhere. So
the last thing I want to give you the opportunity for is anybody that takes the time to bear a conversation with me, I want to give the opportunity to give any kind of shameless plug that you want to give. Tell people how to reach you. I'm going to have your links in our show notes. Any channels to get a hold of you, but just as far as what sets you apart and sort of say what you want to say.
anything you'd like to say?
No, I don't think so. We're really good at what we do.
Man, I think you just killed it. I think that was solid.
He's just happy I finally let him use that slogan. So
You know how long that took?
9 years.
Yeah.
9 years?
I've been wanting to use that for 9 years.
I like it.
Anyways, well, thank you for having us.
Thank you for being on. This has been really great. And like I said, I'll have all your information in the show notes. Make sure that people can reach out to you. Anybody listening, looking for a show, I've got things. I told you, cold meds. Anybody looking for a loan here in the near future, looking at land financing, be sure to check out Ag Lending Group. Their information is in the show notes. Again, Richard Cook, Madison Durkin, thank you very much. I really appreciate it.
Thank you.
Thanks for having us, Mac. Take care.
This concludes episode number 144 for the National Land Realty Podcast with Richard Cook and Madison Durkin of the Ag Lending Group out of Phoenix, Arizona. You can learn more about land ownership and the buying and selling of land at nationalland.com. And please remember to subscribe to this podcast so that you don't miss any of our next exciting episodes. Thank you.